Hey everybody, it's Shannon from alphatrends.net. Today is Thursday, the 31st of August, and I figured I'd do a quick little video about Bitcoin here. We saw some news the other day that Grayscale was going to be able to perhaps convert their trust into an ETF with what seemed like maybe a little bit of ease. So here on the right side, this is a 2-hour time frame, meaning each candle is 2 hours. The price of Bitcoin rallied quickly from 25.9 up to 28,000, and this is the anchored VWAP from that move. So we saw that it was trying to hold above that. Today it broke down through it. I was thinking that, hey, this is probably a good opportunity for Grayscale to start to close some of this discount. So basically what this is ycharts.com. And on ycharts, they have a premium or discount. And what this tells us is that based on the price of Bitcoin, that this trust is trading at a 19.5% discount to what the actual value of Bitcoin in that trust holds. So when that occurred, I thought, hey, maybe that is going to start to close that gap. It's trading at a 19% discount. So perhaps it's going to go to parity, meaning there's an extra 19.5% upside that could get closed without Bitcoin even doing anything. Here's what happened with Bitcoin, however. Bitcoin, as we mentioned on this 2-hour chart, rallied up, it pulled back, it held that volume weighted average price. I bought some of the GBTC right in here, and today I sold it right under here because it was clear that the anchored volume weighted average price from that point was no longer holding it. The average participant since that news came out was losing money. Thank goodness I sold there because it continued much lower. On the left, we see a daily chart. So each one of these bars is constructed of one day. And it reminds me of the phrase, from failed moves come fast moves. And this move up certainly failed. And I'm thinking it could lead to a deeper pullback for a couple reasons. One, this is the trend line from the beginning of this year, basically, where we saw those lows. It hit here, it hit that trend line in mid-March, and then again in early June and bounced. It broke below it just this month, and now we're kind of stuck below that level. The 50-day moving average is declining. We fell short of that 50-day moving average on this rally. The 200-day moving average, that's this thin blue line right here, is still rising, but we're rejecting underneath that. That's not a good sign. This blue line right here is the year-to-date anchored volume-weighted average price. And so far, with the exception of this pullback right in here, we held the year-to-date anchored VWAP, and then we really started to focus on that level here the last couple of weeks. And it looked like maybe it had the chance to break through that. But what we've just done over here on the right is trapped a whole big group of people who thought this event was going to be bullish, and now they're trapped. We've got a declining 50-day moving average. The path of least resistance in the midterm is lower. The 200-day moving average still is advancing. I think we're going to see a quick flush below $25,000 down to the anchored volume weighted average price from the 2022 low. If that doesn't hold, perhaps we see something deeper. I take these things one step at a time, but for right now, I certainly would not be buying this market. It looks like it's headed for sub 25,000.